My name is Tyler. Welcome back to the channel. Today, guys, we are talking about the CCIV trade I did today, and that was selling a cash secured put. So I'm going to tell you guys the benefits about it, how to do it, and why I did it on CCIV. And just like how Jerome Powell always says he has different tools in his toolbox to do different things and get a different result, you're going to need to know all these options trading strategies because they are your tools in your toolbox. So if you don't know what selling a cash secured put is, what is the risk, what's the benefit, how do you win or lose on these, you're definitely going to want to stay through this video, and it can even be a reference to come back to because I'm going to be diving all into it. Or if you're just curious why I made this trade on CCIV, then you're going to want to stick through this video. If you get some valuable information out of it, make sure to hit the like button, subscribe, and comment down below. I do respond to every single comment. So before I get into why I made this trade on CCIV and all the specifics behind that, let's go over what selling a cash secured put is. And it's basically what it sounds like. You're selling a cash secured put. And what I mean by cash secured, that means you are putting up the money to, in this case, I made a CCIV $20 put. So I have to put up 100 shares worth at $20. So the collateral on this is $2,000. I'm not sure where it says it on here. I don't think it says it on the desktop version of Robinhood, but you're putting up 200, oh yeah, cash collateral, $2,000. So you're putting this money up. So this has to be free cash in your brokerage account, right? So you're putting this up at $20 a share. So you're essentially agreeing to buy 100 shares of whatever company at whatever strike price you are doing. So I am agreeing by May 14th, which is the expiration date, if CCIV is under $20 per share, I agree to buy 100 shares of CCIV at $20 a piece. But the catch is you collect this premium up front. So you can make passive income this way. If that's your forte. It's not really my forte to do that on a passive income level because I think there's just selling covered calls is a much better strategy in my opinion, but this is a rockin' strategy. So you do collect the 110 in credit up front, and basically if CCIV in this case were to close at $20 1 penny, I would not have to buy 100 shares at $20 a piece. So I would get my $2,000 back and I would keep the average credit per share. Now, if the only way you can screw this up and lose is if you break the number one rule, which is don't sell a cash secured put on any stock that you would not want to add to your long-term portfolio. That is why I chose CCIV, because if you factor in the $110 credit I got and the fact that I would be buying the shares at $20, my real cost basis on this is $18.90. So with that being said, I don't technically lose money unless CCIV closes under $18.90 by May 14th. The only thing is I would have to buy the shares at $20. If you factor in the credit, like I said, then your cost basis is $18.90. But in my case, I already own a lot of CCIV and I've already talked about me doubling down my position in CCIV. So this is the start of that. I honestly do hope I get assigned because I've already wanted to buy the shares, but at this price, I figure I can even get them cheaper if we do start to go downhill even further in some of these EV and high growth stocks. Now I'm going to show you guys how to get out of this trade if you did want to get out of it. And also I'm going to put up the screen recording from when I got filled earlier on the cash secured put, just because maybe you guys can learn something and see what it looks like before you actually go ahead and do it yourself. So you click on it and then up here it says buy to close and sell to open. So if you're trying to close it, you have to buy it. So click here, click $119, and then always make sure to read this text right here, especially when you're new and you don't know exactly what you're doing, just trying to feel around, and you want to make sure you're doing this stuff right. Now, it says you're paying $119 to buy back one open contract, which will release collateral and remove your obligation to buy 100 shares of CCIV for $20 each on or before May 14th. So you'd have to give back $119. And the way to even make passive income on this or trade these is because you collected $110 credit. If CCIV kept going up, then the put would lose value. So let's say it was at 50 cents, right? Or 60 cents, just for simple math. 60 cents, you could buy it back. It'd be 60 cents a share, or $60 to buy it back, and then essentially you would make almost 100%, because you sold this for $110 and it only costs $60 to give it back, so you'd essentially make like 90% profit. So that's how you can do that. But I don't like to buy these back. I would rather just walk away with the whole sum of money, because I always do this on stocks that I would not mind holding for the long term. And I would say probably 95 to 98% of the time you won't get assigned on this if you use common sense and practice what I am showing you guys. Now, I do want to go over the interface and how you guys can use this to find the best strike to sell a cash secured put on. So first things first, the most important thing is just using common sense. So essentially your strike is what you want the stock to stay above. So mine is $20. So I want CCIV to close above $20. I don't care if it's 1 penny or $5 or $10 above $20, but you don't want it to close under $20. With that being said, you can get assigned and have to buy 100 shares at your strike price if CCIV goes under that strike price before the expiration date expires. So just an example, if CCIV fell, $3 tomorrow and went to $19, I could get assigned and have to buy my 100 shares at $20 per share if that was tomorrow. If it goes under your strike price, you can get assigned at any given time to have to buy those shares. And as far as the break even, you can use it to do your math for you and look and see what's a better deal. Like in this case, a $21 strike is a better deal than the 20.5 because your break even is lower. So really these premiums should be flip-flopped. But if you can see this and take advantage of it and get a better premium and a lower break even, that's always good. The lower the better on a cash secured put. So as far as that, the chance of profit is one thing you don't even want to look at. Like I said, just use common sense. This will steer you in the wrong direction because it basically tells you that you have a good chance of making money. And if this was any other stock besides CCIV and I did not know how it moved or what was going on with it, what institutional investors bought shares at, what the support, what the resistance is, all that stuff, then this would be totally wrong. Now, I do agree with this, but even at $22 a share and a 62% chance of profit, I think there's a greater chance of 62% that we will be under $22 per share. Now, I know this is factoring in the premium that you receive, but if this was any other stock, like I said, just take CCIV out the equation, you would definitely have a lower chance of profit than 62%, just because we have so much buys by institutions. I don't think we're going to get down to my strike price, but nevertheless, don't even look at the chance of profit. It'll lead you in the wrong direction. Go off your common sense, and hopefully you have a knowledge of how the stock moves and where the support and resistance levels are in that stock. So as far as the percent change, that's basically just saying you're getting a better deal. CCIV went down 4.01% today, so the puts are going to go up, so you're going to get more premium when you sell those puts. And as far as the change right here, I wouldn't pay any mind to that. That means nothing. And then your price is obviously what you're going to get paid, and that is in case you guys don't know, like $1.19 is really $119. So just take the dot out of it. Just take that dot out of it and it's $119. It's simple, just like that. The specific and flat out reason I made this trade is because I don't think CCIV is going under $20 per share, just because all the institutional buys we had at $15 a share, and once we get around $20 a share, we just see tons of buying volume coming in. So I don't think we're going under $20 a share, so I don't think I'll get assigned. But if I do, I get the shares at $18.90 a piece, which is a steal. And I've already played this once. I bought in around $17 for a couple hundred shares. I ended up selling out at $55 a share and made a video about it, which I'll link up here if you guys want to watch it. Tons of hate on it. You guys should read the comments, some nasty comments. Well, 2 days later, we dropped 45%. So me and the stock, we kind of roll together, and it's kind of easy to see what is happening with it. So I'm going to wrap up the video right there. Long story short, I don't think I'm going to get assigned on this, and it's a win-win situation. I would always, if I were to recommend anything to you, nothing on this channel is a recommendation, but if I were going to give you something to go off of, I'll say, make it so it's a win-win situation, that even if you get assigned, you wanted to buy the shares anyways, and you got a good deal on them. And if you don't want to get assigned, I wouldn't do it. I mean, if you're not going to be happy owning 100 shares at your break-even price or whatever you're going to buy them for, I wouldn't do the trade. Simple as that. There's always another trade to be made, and this is only one tool out of your toolbox. So if you have a full toolbox, then it's no problem. There's no need to FOMO, none of that. But I am going to end the video right here, and I do have links in the description. I have a Robinhood link. If you're not signed up for Robinhood, you get 2 free stocks. I get 1 free stock. It really help your boy out, and I would greatly appreciate it, as well as a Discord link and an Instagram link. So check those out down below. I do greatly appreciate it. I'm going to get out of here. I will see you guys later in the Discord and in the comment section down below. See you later. Bye.